What is going on in the Twin Cities housing market? Well, I am going to walk you guys through that and help you understand what we're seeing right now on the ground with home prices, mortgage rates, all that fun stuff. This is a high level overview. I'm going to show some numbers here, some facts and figures. I'm not going to go super deep into the weeds, but we want to provide everyone with, state of the market. There's so much news right now about mortgage rates and interest rates and housing and houses climbing, dropping. Like, what exactly is happening? Is the news that you hear out, in the broad scope of the news that's really driven by the coasts, does that apply to the Twin Cities or not? And what should we expect if we're looking at buying or selling in the Twin Cities? Matt, what should we expect to see with house prices and with selling and all that fun stuff? So let's go through it. Let's jump in. I think the first thing I want to touch on with everybody is state of mortgage rates. Because right now that's what's driving a lot of the noise and a lot of the concern. So if you look at as of right now, as of the time of this recording, September 22nd, 2022, what does the average 30-year mortgage rate look like across the country? It's 6.3%, which is really high. The Fed just announced another rate hike, which does not absolutely mean that rates are going to change, but mortgage rates are tied to what the Fed does. And so the Fed's made a lot of moves over the last year, and you see mortgage rates climb. And if you look at rates over the last 5 years, right, we are at the highest we've seen in the last 5 years. Look at the last 10 years. We're still the highest mortgage rates that we've seen over the last 10 years. It shouldn't concern you, but it should make you pause a little bit and reconsider what you're going to do from a purchase standpoint as of right now, right? If you were looking at houses and you were shopping a year ago and rates were 4%, and you were looking at a $500,000 house, right? You had a payment that you would have paid at a 4% mortgage. If it's 6.3% now, and you're going to pull the trigger and actually buy that, your monthly payment is going to be vastly different than it was when you were quoted at 4%. So the big caution, the big thing that you have to understand right now with the mortgage rates is that you really need to know what you can afford. And if it's been a while since you were pre-approved, if it's been a while since you've calculated monthly payments based on current rates, please do that exercise, because we've seen too many people get burned where they're going off of old assumptions on what their mortgage payments were going to be from outdated data, outdated rates, and they get to the closing table, the rates have completely changed, right? It may have taken 3 or 4 months for the closing to happen. And if they didn't lock in their rates or something, if they weren't working with a good mortgage person, you get into a pickle, because now all of a sudden rates are way higher, mortgage payments are way different. I do want to emphasize one other thing though. Historically speaking, if you look at mortgage rates over the last, as far as this tracks it back to 1971, you can see rates have been just crazy, historically speaking, right? We have been in a very, very, very stable low period the last few years. And so everyone has that frame of reference in their head. But if you take a step back and look, it has been tumultuous over the years. And so what we always advise people is you have to make the decision today based on current rates, right? If you like the house and you can afford it, buy it, right? But you could refinance later. So you're going to buy the house because you love the house, right? You're going to get the rate that you're given because that's what it is today, but the rate can most likely change down the road. So don't let interest rates be a reason why you don't do anything. If you're ready to make a move, if you want to make a move, you can afford to make a move, you do it smartly. We are big advocates of doing it. Get into that house that you're super excited about. Get into the house that you love, and just, make sure you can afford it and plan on refinancing 3 to 5 years down the road. Make sense? Awesome. Okay, so that's mortgage rates. That's what a lot of people are hearing about right now with the Fed doing what they're doing. Obviously, the Fed has huge repercussions on the stock market and other things, which are not in the scope of what I'm going to talk about. This is all about real estate and houses and pricing and that sort of stuff. So what are we seeing in the Twin Cities market? That is a huge question on everyone's mind. Let's look at it. Again, I don't want this to be super, super numbers heavy. So if this is over your head and makes your head hurt, sorry. If you just want to talk about it and have questions on anything specific, just reach out to to any of the four of us on the team, we could go into it more detail. So, what you're looking at is the Twin Cities. Okay, this is monthly homes for sale across the Twin Cities as it stands as of August. Now, I know that's a little, 3 weeks outdated from the time this recorded, but this is the access to the data that we have right now through this particular tool. I'm going to show you guys more real time prices later on. But as it stands through August, which rates were still going high and things were still happening even in August, so that should be in the numbers. You can see that we had 7,000 active homes for sale in the Twin Cities. These are single families, townhouses, condos, etc. That is down 1.6% versus the same time period last year. So August last year, 70, almost 7,200 houses. August this year, 7,000. Okay, so homes for sale. Why is this something that's important? Why do people care about this? Well, as you can see, prior to COVID and all of the major changes that happened in the economy and everything else, we had a lot of houses for sale throughout the Twin Cities. 11,000 houses on average were for sale in a given month. If you're at 7,000 houses now available for sale in a given month, what does that mean? Like, what are the repercussions of that? Well, typically speaking, if you think just supply and demand curves, lower supply is going to lead to greater demand and higher prices. You can see as supply dropped throughout all of 2020 and 2021, it makes sense why prices would have gone so crazy, right? Less stuff to buy. There's still as many people that want it. There's still, money was still very free. Interest rates were low. Money was free flowing, I should say. Rates were low. People had cash to do things if they weren't hugely impacted by shutdowns and that sort of stuff, which that was a lot of people in the Twin Cities that had the ability to buy. That's why prices went so crazy. So what's going to happen now? Well, if you look historically in the Twin Cities, we've never been this low. We've never had this low of inventory, houses for sale on the market ever. Well, at least as far back as 2005. So what does that mean? If you just think supply and demand, that would tell me until supply comes way, 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 way up, um, we still don't have enough inventory for houses to drop. Now, I'm not saying that houses can't go stagnant in prices. I'm not saying that pricing can't kind of hold flat, but look at what happened prior to, the Great Recession. We had on average 23,000 houses for sale in the Twin Cities. Look at supply. Whoa. I mean, this is all of a sudden you just had tons of property, right? And the peak of right before the recession started, there was 34,000 houses available in the Twin Cities for sale. And then ever since then, it's just been this huge downward decline. People just aren't selling as many homes as before. There's more people in the Twin Cities, right? More families that need housing. There's not enough housing. This is the problem. This is a huge problem. Where does that leave you? If you're thinking of selling your house right now, should you or shouldn't you? If you're thinking of buying, is the market going to crash? I don't know. I mean, I don't have a magic 8 ball, but it looks absolutely nothing like it did in the prior crash, right? So the only way in my mind for a crash to happen is to have a ton of supply, like so much supply that you can't sell because people, supply outweighs demand, and we just don't see that right now. So, okay, that's the state of houses for sale. What about new houses coming on the market? Okay, if you're going to sell your house, and you're up against all the other people that are selling their house, or you're a buyer looking to buy, look at new listings. Again, this is going to speak to the supply equation, the homes for sale. It's not like we have a bajillion new listings coming to market. In fact, new listings are at a record low. Again, inventory is low. Houses are low. New listings are low. Okay. If we zoom out on this one and look historically speaking, we're not to the point of, the bottom of the recession in 2012 and 2013 where, new listings were at their historical low, but we're pretty dang low, right? Look at new listings prior to the crash. I mean, just tons, 110,000 new listings prior to when the recession happened. Tons of inventory, tons of houses coming on the market, lots of people selling, lots of builders building, lots of inventory in the market, right? We don't see that. That's not the situation we find ourselves in today. Today, we're still at a spot where there's not enough stuff. Rates are high. Fear is high, unknown is high, stock market is unknown. Like there's a lot of macro, crazy, weird, complicated things happening. But when you take a step back and look at the Twin Cities specifically, it doesn't appear anyways that we're in a about to drop off a cliff market. Even if rates went to 20%, there are still people with cash that can afford things. There's still people with a lot of equity in their houses that can make moves. There are still builders building. There's still houses that were built, bought, and sold in, the 80s, the 70s, 80s, and other times where rates were super high. So that doesn't turn the market off. It slows it down. It makes it more complicated, makes it harder to get into things, but doesn't turn it off. It doesn't cause prices to go bonkers. Okay. Um, so those are, two super important ones I really like to look at. Days on market is one that we like to track too. Or sorry, not days on market, months of supply. Days on market is important too, but months of supply, again, speaking to where we at with houses available on the market. So days of or months of supply would be how much active inventory is available, how many houses typically sell in a month, how much inventory could sustain average activity, meaning, according to this calculation, we have 1.3 months of supply. So if no more new houses came on the market, we could sell all of the market that's available right now. It would take about 1.3 months. Historically low. Again, we don't have supply. We don't have houses on the market. Look at back in the recession and everything else. We had 10 months of supply at the peak of the foreclosure market. Makes sense. So much supply, so much product available. Of course, prices would drop. If you believe in microeconomics, right? So where are we today? Super low. Look at all of the last 2 years. Drop, 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 drop every single month, right? And now we're kind of at the stagnation. We went up, 0.1 months the last couple of months. But again, that's not drastic. Now, I'm not saying that can't change. It's not like, 2 years from now, could we be at 4 months of supply? Absolutely, we could, maybe. I don't know that it's likely. The one that everybody wants to hear about, sales price, right? This is the one that everyone is very curious about. If I'm going to sell my house, if I'm going to buy a house, right? Am I going to overpay? Am I going to get stuck with something that's going to drop in value? So let's dig into that a little bit. If we look at just the Twin Cities region, broadly speaking, every single month, even with rates going absolutely bonkers. Well, let's look at the 3-year view. Okay. Rates have been super low, right? And they start ticking up, ticking up, ticking up. We were already into 5% plus interest rates at the beginning of 2020, which is kind of a normal interest rate over the last 10 years, but 5% feels way higher than 3. It didn't slow anything, right? Rates were still ticking up. Median price points were still ticking up. Everything's been going up. Here we are in September, and the question is, rates went up even more. What do we see in pricing? Well, the info sparks that I was showing you guys, it only goes through August. When I look at September, this is through my MLS system, pardon the rudimentary lookingness of it, because the system is not super pretty when it outputs. But Hennepin County, Ramsey County, Scott County, I have the Twin Cities and then the counties broken out in this chart here. I like to look at the different counties just to give you guys an idea of how things change between where you may be looking. So Twin Cities, broadly speaking, median price point in August, $355,000. Hennepin County itself, so Minneapolis and the Minneapolis suburbs, $360,000. Ramsey County, St. Paul and the St. Paul suburbs, $300,000. So huge difference. If you're looking at the Minneapolis side of the river or the St. Paul side, you're going to expect a huge difference in price points. And then Scott County, which is a southwestern suburb, you could see is one of the highest priced counties in the state. Median price point, $400,000. Okay. That was through August. What you're looking at in this box is through September. Okay. Hennepin County, median closed sales price for Hennepin County, $365,000. What was it? In August, $360,000. So as of September, closed houses up $5,000 more from what it was last month. Ramsey County, $310,000, right? Closed price here, median closed price point in Ramsey, $310,000. What was it? $303,000. Scott County, median price point closed, median price point in Scott County, $425,000. What was it before? $403,000. All 3 major counties in the Twin Cities have gone up and up and up since August's numbers in light of rate increases. Okay. That's just what we're seeing. Now, again, could this change? Yes. Will it change? Probably. Will there be more changes in the market? Probably. If rates go to 10%, what's going to happen? Probably going to see a slowdown of growth and appreciation. Probably going to see more inventory come on the market because things might take longer to sell, right? There'll be some disruptions. Will we stay at 10% interest rate? Will we stay at super high interest rates in general? Probably for a little while. Inflation's crazy. It's really tough right now, right? So it's here for a little while. The market's doing what the stock market's doing what the stock market does. There is probably going to be, another year or two of some turmoil. However, However, like, it's still, relatively speaking, a good time to buy. In fact, if I go back to this chart, I always say this because I think it's just super, super, super important to remember. Look at prices over the max. Okay. Now, 2008, 2009, scary times, recession times. If you weren't alive then, if you weren't involved in real estate at all back then, you don't quite understand what I'm talking about. But let me just tell you, very nervous times. I bought my first house right here, 2008. Okay. I didn't know what was going to happen. None of us did. Rates were, I mean, they weren't great. They weren't horrible, but they weren't great. I bought a house and holy crap, the next 3 years it went down. Okay. However, however, I bought my house, paid what we paid for it. We sold it in 2013. Okay. Prices were almost back to what they were. I mean, they were getting close, right? And then ever since then, it's been great. So if I were to tell you, if you bought at the peak of the market in 2000 and well, for Minnesota, 2007, peak of the market, median price point in the Twin Cities, $230,000, right? Would you have been mad? Well, you would have been real mad in 2008, 2009, 2010, right? You would have seen a lot of a lot of drop in price, a lot of depreciation. However, historically speaking, real estate tends to appreciate over the long haul. So assuming you can afford what you're buying, and you like what you're buying, you're doing it for the right reasons. You're not speculating, right? You're getting a house for your family that you want to live in and want to be in. It might take 10 years before prices get back to normal, but they never come back down. They could. I'm not saying that it can't. I'm just saying that historically speaking, at least in the Twin Cities, there's never been a 10-year gap where if you paid a price for a house that it's worth less 10 years later than what you paid for it. So, I mean, hopefully that gives you a little bit of confidence, maybe a little bit of, you know, security that it's okay to buy. I personally, I'm an investor. I buy real estate. I'm still buying. We have bought in plenty of properties in 2022, the peak with high interest rates. Am I making a killing on them? No, I'm not. Not today, right? They break even for the most part, but 15 years from now, am I going to be happy I did it? I'm banking on yes, right? I wouldn't be buying them if I didn't think it was going to be beneficial. So that is the state of the Twin Cities market. That's what we're seeing. Let me know if this is helpful. This channel is all about the Twin Cities, living in the Twin Cities, your guide to living in the Twin Cities. We talk a lot about things to do, where to go, restaurants, places to see, attractions to take your family to, right? But we were thinking it would be helpful to help you guys understand, what does the market look like? We are realtors. We're all licensed realtors in the Twin Cities. And so we're involved in this every day doing real estate stuff. And we thought, why not share with you guys what we're seeing so you understand it too? Because that's part of living here. What is your house worth? What does it look like? If you want to move somewhere and explore a different part of the state, can you? Are you gonna lose money doing it? So let me know what you guys think. If you enjoyed this content, if it was helpful for you, if you've got suggestions on, other things we can add to your guide to living, I'd love to hear it. We're gonna most likely, if this is a positive response, we're gonna start doing a live show for you guys once or twice a month, going through state of the market and what we're seeing. So more to come on that. And until next time, thanks so much for hanging out with us, and we'll see you around. Take care, everyone.